What up, universe? That's Adama here with All Street Investing, and today I want to show you guys a few techniques of how I'm able to confirm profit every day on the stock market. I haven't traded in a couple of months live, but I've been trading on the side. I had to switch brokerages from Robinhood to Webull, so now I'm going to show you guys basically what I do on a program called Thinkorswim, and hopefully you guys are able to learn something from this and possibly use it on your own trading methods. That way you're able to make your own money. All right, so let's try it. Okay, so what you guys are seeing right now in this little corner up here, all the lines, is called Thinkorswim. It's a program called Thinkorswim. I'll put the link in the description below. You have to make an account, but this is basically how you get it. All right, so first and foremost, there's a stock that went up drastically on Friday. There's this really big stock that went up on Friday. It was really big. It went from a total of about $2.86 to a high of $7.07. So that's pretty much like a 3 times rise ish, like a 2 to 3 times rise. And anyone invested in that beforehand would have made a lot of money. But anyone who caught that during the day probably lost money because it was fluctuating so heavily. But I made money on that, and I want to show you guys how I did it. And this actually works for every single stock in the entire market. Right here, you guys can see it says about 303. We'll say at the 303. In about 15 minutes, the stock decided to fly all the way up to about 707 being the high. So if you bought it at 303 and even sold it at 6, that means you made 100% of your profit. If you put in $1,000, you made an extra 1,000. If you put in $5,000, you made an extra 5,000. So this thing went up from 7 all the way up to 707. Now my thing is, a lot of people like to chase these stocks that fly up drastically because the outstanding shares is very small, so people can buy a large chunk full and it'll just start flying up, right? So far above everything that it's never been before. But if it's never been like that before, we can't necessarily say that we have record of it ever being that high, which means that the next thing that people are most likely going to do, since they have nothing to rely on, is to sell it. How it is. If you see money, you're going to sell your shares to take the money. That's what everyone's going to do in the stock market. So that entire buy order of everyone buying into it, as soon as everyone's done buying into it and it hits a limit, in this case it was $7.07, it's going to start falling. This is where I start to come in. I come in on the consolidation. So what we have now before, from $3 to about $7, is called a breakout period. Let me try to explain this in the best way I can. So we already understand that 303 was the beginning of the day, right? It flies up to 707. 707 in terms of 303 is about 150%, or it's above average. It's above average. All these lines that you guys are seeing right here, the blue line, the white line, the yellow line, the red line, the green line, they're averages, right? And so if you guys understand how averages work, for you to have an average, you need to be able to perform above it and then below it to even make an average in the first place. So nothing can just parabolically go upward and create an average. Because if I ask you guys to count to infinity, which is parabolically upward, you can't have an average of infinity. You can't divide infinity by 2. Infinity divided by 2 is still infinity. Infinity divided by infinity is not 1. It's still infinity. Which means that there's going to be times where this thing goes all the way back down. You know what I mean? When it goes down and starts acting below average, since it just acted above average, the next thing to do is act below average. But now because it's acting below average, the next thing to do is act above average, right? That's usually the most common practice in the stock market, is being able to find the average and then always buying it below that average. In this case, what I usually follow is what's called the exponential moving average, aka the EMA, which is this white line that you see right here. The stock goes above the EMA, the white line, and then it starts trending above it as well, and then it starts breaking the white line. Do you guys see these little peaks where it starts hitting underneath the white line, like right here at 532, and then it goes back up to about 571, or it goes from 477 all the way back up to about 556? You know what I mean? These little bumps and valleys underneath the EMA is what allows a lot of people to start making money. Only because when something is acting below average, it's going to try to act above average next. But before it acts above average, it has to cross the average first. Let's say my hand is the chart, and this hand is the average. If it crosses above average, right, it has to now go below average again. So every time it switches between above and below, it's crossing the average line. So if you always get it below the average line, and when it starts to peak back up again, you can sell it there at the average or above the average. So in this case, instead of trying to chase all this money that happened in the morning, the smartest people would wait for the consolidation so that way it gets underneath the EMA, underneath the average lines right here, and start setting their sells. People who make the most money in the stock market are the people who can manage their risk. That's all it is, to be honest. Let's say I put $10,000 in at $4.28, and today I'm just looking for maybe $500. That would be 5%, right? Which means that I need a gain of about 20 cents for me to make $500. As soon as I buy it at $4.28, I'm already putting a limit sell $20. I'm already putting a limit sell 20 cents higher than what I bought it for. So 20 cents higher than $4.28 is $4.48. What's funny about that is that if you look closely, the EMA currently is at $4.70 when I bought it at $4.28. So if I bought it at $4.28 and the EMA is at $4.70, that means there's a lot of correction upward. There's a lot of correction upward that it has to correct before it goes back down again. So if you bought it at $4.28 and you put a limit buy or a limit sell at the average, which is $4.70, you would have made from $4.28 to $4.68, which is about 8%. Now that's an 8.39% rise. I don't know if you guys can see that. But an 8.39% rise from $10,000 means you just made an extra $839. And the EMA line is 1 point on the graph that tells you where the average is. I like to use other indicators to kind of show me and help me out. One of them is called the RSI. I think it's a very common indicator. The RSI kind of tells you the strength and the value of the stock, if it's going to be overbought or oversold. So overbought meaning too many people are buying it, which means the demand is too high. Oversold being too many people are selling it, so that means the demand is too low. You always want to get something again below average. So there's an overbought and oversold. So in this case, if you follow a pattern, if you wanted to buy something under average, you would buy it when it's oversold. That way it has more room to go upward, so that's why it's overbought, right? You would probably want to buy something that's cheaper in life than something that's more expensive if it's giving you the same value, right? Like if you went to a gas station and something was $5 versus another gas station which is something that's $2, but it's the same gas, you most likely go to the $2 one. You can use the RSI in comparison with the EMA and be like, okay, these things are telling me the exact situation. It's saying that it's below average and the RSI is below average, which means that there's about 2 to 3 indicators, the EMA and the RSI, say that this thing is going to go up from here because it's too low and it's acting below average. So boom, you buy it here, again, 8%. If you sold it a little bit higher, 20%. 20% is ridiculous in some cases. It's actually very, very ridiculous. By those two scenarios, you could have made money just playing with it. And no matter where it is in the chart, if you have bought below average, below the EMA, and then you sold it either at the EMA or above the EMA, then you would have made money. So we can go through the little chart today and show you. So this was the this was the area I was speaking about right here. You could have bought it here, you sold it here, below and then above. You could have bought it here and then sold it here, below and above. Bought it here, sold it here, below and above. Bought it here, sold it here, below and above. Bought it here, sold it here, below and above. And it continues. Now, this is very true for the entire stock market, so I'm going to show you guys Tesla. Tesla follows the same pattern. Look at this. You could have bought it below average and sold it above average, bought it below average, sold it above average. I can go to Nike. Nike was downtrending on Friday, so bought it below, sold it above, bought it below, sold it above, bought it below. So the whole point, after understanding how averages works, is just understanding your risk management. No one is trying to make $1 million in a single day on the stock market because that's like literally very hard. But if you started at a single number, let's say you started at $10,000 or even $5,000 and you just got 1% or 2% every single time you traded, those things start to compound simply because you understand when to get in and when to get out. And so just to recap, you always want to be able to get in something when it's below the EMA and sell it when it's either at the EMA or a little bit above the EMA. Something that's downtrending will always be acting below the EMA more, and something that's uptrending will always act above the EMA more. But for you to have an average line in the first place, you need to be able to perform below the EMA and above the EMA If you guys did learn something, please leave a like or subscribe to the channel for if you want to basically make money with me. I'm just trying to help a lot of more people out, so let's just see where this goes. I'll see you guys in the next video. Alright, I'm out.